Hey, welcome back. It's Jason Walter here. In today's video, I want to share a new update from Realtor.com because they actually just announced today, at the time of this video, their latest housing market update. They post a weekly update for our housing market across the United States. And they're sharing some interesting trends we're seeing right now, including a giant increase in the number of reduced price listings compared to 1 year ago. So with that said, let's go ahead and dive right in the video here. And this was published on September 22nd of this year, and this covers the week ending September 17th of this year. And just like my other previous videos, I actually didn't even read their analysis here. I want to share my own analysis based on their data they actually share on their website here. So if you go to realtor.com/research/data, I'll leave a link below for you guys if you want to see this. Scroll down right here and click on this link right here, which more or less takes you to this data right here, which I have color coded and also provide some notes for you guys as well to share the latest trends we're seeing right now across the United States. So right here is the week ending September 17th. We have a 13.1% increase in the median list price across the United States right now. So asking prices right now are 13.1% higher than they were for the same week 1 year ago. And for gains at 13.1%, this is far higher than historical averages, which tend to be in the range of 3 to 6% and not 13%. And this, of course, is one reason why we're seeing a huge amount of reduced price listings, which have been increasing for 4 consecutive months, but more on that here in just a little bit. So again, home prices up 13.1%. I should say the median list price is up 13.1%. And again, it would be entirely normal to see our housing market slow down in the second half of this year, which of course is our seasonality of our housing market. But as I mentioned in previous videos, because mortgage rates have been increasing so much this year, that's going to cause a further pullback in home buying demand for the second half of this year as well. And we're seeing that just a little bit in the data I'm sharing with you guys today because the median list price was in the range of around 15 to 18% from May all the way until the end of July of this year. But more recently though, gains have been in the range of 13 to 14%. Okay, let's talk about housing supply, which of course is housing inventory. So we've been seeing year-over-year gains, according to Realtor.com, in the range of 15 to 30% for now 13 consecutive weeks now. In other words, the number of houses listed for sale have been more or less the same over the past 3 months, and this is because we're seeing a pullback in the number of people listing their houses for sale. So what's happening right now is that because we have fewer new listings hitting the market for now 11 consecutive weeks now, this is causing inventory growth to stagnate for now 13 consecutive weeks now. On top of that, these declines in the number of new listings hitting the market have been down by double digits compared to 1 year ago for 5 out of the last 6 weeks now. Also, as I mentioned in my video from about a week ago, part of the reason why we're seeing fewer houses being listed for sale is because people like myself have mortgage rates of less than 4%. So it's giving people not a lot of motivation to get their houses listed for sale, given the fact that mortgage rates are averaging about 6.6% at the time of this video. On top of that, our housing market has been slowing down greatly over the past several months, and therefore home sellers don't have as much leverage with home buyers as they once did. And because we're moving more towards a buyer's market right now, homes are taking longer to sell as well. So right now, for the week ending September 17th, it's taking about 6 days longer to sell a house compared to the same week 1 year ago. And in fact, over the past 8 weeks, it's taking longer to sell a house compared to the same time period 1 year ago. And yet another interesting trend we're seeing right now is the number of reduced price listings has been increasing. It has actually been increasing for 4 consecutive weeks now. So for the week ending September 17th of this year, we're up 75.9% compared to the same week 1 year ago in the number of houses for sale that have reduced their asking prices. This is actually much lower compared to mid-June all the way until we hit July, when the share was in the range of 112% all the way down to about 91%. Also, it's worth mentioning here the growth rate at 75.9% in the number of reduced price listings compared to 1 year ago is still significantly lower compared to mid-June all the way until mid-July, where we saw year-over-year gains in the range of 92% to 112%. But have a look at this because this is pretty eye-opening, because 1 year ago, we were actually down 4.4% from 1 year ago. And back in 2020, we were down about 46.5% in the number of reduced price listings compared to 2019 at that time frame. So it's pretty eye-opening when looking at a decrease of 46% back in 2020. Now we're up 76%. Also, for the share of reduced price listings, according to altosresearch.com, for the week ending September 16th of this year, the share is at 41%. This means approximately 41% of houses listed for sale right now have already had price reductions. Compare that to the week ending May 6th of this year, the share was only 20%. So in other words, this share has doubled in the last 4 months. So with that said, I actually want to share a summary with you guys in today's video because, of course, that was a lot of information to cover. So number one here, inventory is still more compared to 1 year ago due to less home buyer demand. But we're not seeing the growth of supply like we once saw earlier this year. This is likely due to fewer new listings hitting the market for now 11 consecutive weeks now. However, altosresearch.com as well as Redfin are reporting inventory declines over the past several weeks now. And number two, if inventory continues to stagnate or decline and new listings continue decreasing, that will likely soften the blow of this housing market slowdown though. But average mortgage rates at the time of this video are at 6.6% according to the Mortgage News Daily, and this should cause home buying demand to slow down greatly if mortgage rates stay above 6% in the near term. And if average mortgage rates hover around 6% or more, this could likely cause inventory growth to increase over the weeks to come. And number four, the number of reduced price listings are much higher compared to the prior year, and obviously compared to 2019 and 2020 as well. And the growth rate has been rising for 4 consecutive weeks now. And number four, houses are taking longer to sell compared to the same week 1 year ago for now 8 consecutive weeks now. Again though, this is a lagging indicator because this is based on houses that have actually closed escrow or houses actually have sold though. Therefore, I expect that days in the market should increase further in the weeks ahead and also the months ahead due to seasonality, but also due to the spike in mortgage rates. In other words, as home buying demand decreases, it's going to take longer for home sellers to sell their houses. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.